program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's get across what we saw overnight. Global stocks sliding as investors consider the future path of interest rates, while there are a number of risk events for investors to consider, including the delayed release of economic data and Nvidia's results, which are expected to be pivotal on growing concerns about valuations amid the AI boom. All three major indices there on Wall Street, they did pair losses, but by early afternoon remained in negative territory. The CBOE Volatility Index, Wall Street's fear gauge, hitting a one-month high. Stocks, specifically shares of Home Depot, dropped after the home improvement chain forecast a larger than expected decrease in full-year profit after missing estimates for quarterly earnings, as tariff-driven economic uncertainty dampened demand for those big-ticket renovation items. Retail giants Target and Walmart are due to report later this week, while US-listed shares of Chinese e-commerce company PDD fell after its third quarter revenue missed estimates. Shares of Amazon fell after the EU launched a probe into the AWS cloud services, while Microsoft shares came under pressure too as the European Commission also targets Azure in the investigation. Shares of medical device maker Medtronic rose to a three-year high after raising its FY26 profit forecast. And shares in drug maker Vanda Pharmaceuticals surged as it revealed an experimental drug significantly reduces nausea in people taking the popular weight loss drug Wegovy. And crypto-related stocks, they dipped further after Bitcoin dropped to a near 7-month low. Well, the number of Americans on jobless benefits has surged. That was between mid-September and mid-October, suggesting an elevated unemployment rate in October as an uncertain economic environment discourages hiring. This comes as a divided US Federal Reserve begins receiving updated economic reports, with policymakers looking for clarity in their debate over whether to cut interest rates when they meet in the next month. Fed Vice Chair Philip Jefferson saying the central bank should go slowly, whereas Fed Governor Christopher Waller has said, "I'm not worried about inflation accelerating or inflation expectations rising significantly. My focus is on the labour market after months of weakening." And President Trump has said his administration has begun interviewing for the next Federal Reserve chair. US Treasury yields have fallen further as a weaker stock market boosts demand for safe haven bonds. The 2-year yield was down to 3.58%, the 10-year around 4.12%. The US dollar reaching a 10-month high against the yen. The Aussie is trading at 65.1 US cents. Oil prices have risen as traders consider the impact of sanctions on Russian oil flows. Brent crude 1% higher at around $65 a barrel. Copper down almost 1%. Iron ore little change at around 104 US a tonne. And gold has lifted from a one-week low, supported by soft US employment numbers. Spot gold around $4,070 an ounce. And Bitcoin fell below 90,000 but has recovered somewhat to be trading around 93,000 US dollars. All right, let's get a greater focus then on what we're seeing, particularly on US markets. Peter Cardillo joining us from Spartan Capital. Peter, welcome back. So we have seen those wobbles on risk asset markets. What are investors concerned about, do you think, at the moment?
Well, there's no question that, there's a concern about the artificial intelligence, and we've seen the sector that's been under pressure now. And obviously, it's a correction. I think it's the first phase of a correction in terms of the AI. Now, this all could end tomorrow if Nvidia reports earnings within market expectations, or perhaps even a bit better. If that were to happen, then I think we'd see the pressure in the market, the pressure in the AI sector abate. And that probably means that we could get back on track for a year-end rally. The market has some of the smaller speculative stocks in the artificial intelligence area have given back anywhere from 50 to 60%. So that's a sign that there's been a correction, and we just have to wait and see what could turn it around.
Yeah, in fact, we've seen that rotation, Peter, out of tech into those more defensive and cyclical stocks. Do you think that is likely to gather pace, or this is all contingent on what we're likely to hear from Nvidia?
Well, I think, last week we saw that rotation, and we saw a big pop in the old economy stocks, and that I think is a good indication that while the odds of a rate cut have slipped under 40%, I think the rally in the old economy stocks suggest otherwise, that we're probably headed for a rate cut, which I believe is going to happen. This week we will be getting a glimpse of the September unemployment report, and there'll be two more after that, the backtrack of November, and of October, and then of course November, and I think we're going to see some weak data. In fact, today we saw the ADP with its new indicator come out and said on a 4-week average, the economy lost about 2,500 jobs a week. So that brings us up to about 10,000, a little over 10,000, 12,000 jobs. And so I think that will be confirmed when we begin to get the official data. And I think the Fed is going to have to cut rates. They're going to sacrifice perhaps the fight against sticky inflation. And I do agree with Wallace, by the way, Fed Wallace, who basically said, he's not really too concerned about inflation getting out of hand, and it's imperative that the Fed intervene to support the labor market. And I think he's got it right.
Peter, on that basis, do you feel as though perhaps going to be more support for US Treasuries with the yields falling, particularly if you're seeing those weaker job numbers?
Yeah, I think so. I think there's a good chance, over the next several weeks that we could see the 10-year drop under 4%, probably get as low as 385, 390, around that area. And again, that's based on the perception of weak economic data. And let's not only concentrate on the labor indicators. There are other indicators that have not been strong at all. And I think once we get the numbers that for a good part should come out, there are those that will probably never come out, but most of the other numbers, such as retail sales and industrial production, leading economic indicators, I think they're all going to point to a real weak economy. When I say real weak economy, an economy that's not growing, an economy that, in a certain respect, may feel that it's already in recession, in the sense that you have a divided economy. You have the wealthy who are enjoying a good economy, and you have the middle class that are struggling to pay their bills. Look, inflation in terms of grocery prices has gone up tremendously. I experienced this just Saturday. I bought 2 boxes of coffee pods, and it cost me over $100, when just maybe 4 weeks ago it would have cost me $72. So inflation in terms of certain products has gone up, has skyrocketed.
Well, that's certainly an issue that President Trump has had to deal with, and hence we have seen him back off on some of those tariffs, particularly as it relates to food. Peter, more broadly, I'm just wondering, do you watch Bitcoin as a potential indicator for sentiment?
You know, I'm not a fan of Bitcoin. I don't know very much about it. I never was a fan of Bitcoin. I don't believe in it. It's a product that was introduced to the market, 35 years ago, maybe a little bit less. I'm not even sure. And if you want to compare it to gold, obviously, there were all kinds of projections that it was going to take gold's place. It was a true hedge against inflation. It was a true hedge in market turmoils and all of that. And look what happened. Look what happened. We had cries, projections that it was going to 250,000, 300,000, 500,000. There were some people even saying $1 million. And here we are today. It dropped under 90, rallied a little bit back. I don't think it's a meaningful indicator at all. I don't think it's an indicator at all, to be honest with you.
Well, you've mentioned...
It's something...
No, I was going to say, Peter, you mentioned gold. Let's go there then. What are you seeing there? Do you feel as though that support is still there for the precious metal, has come back, but obviously in the midst of this uncertainty?
Yeah. Well, I think, yeah, sure, of course. I mean, what happens is when they begin to sell everything off, and we saw that with everything, we saw that with commodities, we saw that with oil prices, we saw that with the metals, we saw that with stocks. It just feeds on itself, and they just sell everything at one time. So what do you do with gold? You buy the dips. Gold has not run its full course just yet. I think we're going higher. Gold is the true hedge against turmoil, against inflation. It was an interesting article in today's Wall Street Journal. They pointed out that there are, I'm sorry, not the Wall Street Journal, CNBC.com. They pointed out that the very wealthy are lending out their gold bars. They're renting them out so that they collect interest on it. So you see, an item that doesn't really pay interest, right, and lays in your vault somewhere, or in some depository vault, right, is now being used as some sort of a vehicle to have income. So with that in mind, it tells us that it's the true store of value.
Peter, always good to get your view. Thanks for joining us at Spartan Capital.
Thank you.
All right, let's turn our attention to the local market. Now, of course, off the back of those very heavy falls we saw yesterday, looking potentially to add to that, SPI futures off close to 0.1%. Stay with us, we're going to get right across the open in just a minute or two.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.